This is Fintech Takes, the podcast keeping you in the loop on all the latest fintech trends, news, and ideas. I'm Alex Johnson, creator of the Fintech Takes newsletter, your host and self-confessed fintech nerd. Let's go! I know that here on the show we talk a lot about the importance of bank partnerships when it comes to the success of any type of embedded finance or fintech endeavor. So let me tell you about a provider that is raising the bar in embedded finance. Built by Fifth Third Bank, Newline enables enterprises to launch and scale payment products using their API-first platform, enabling embedded solutions that scale responsibly. Learn more about Newline by visiting newline53.com. Hello, and welcome back to Not Fintech Investment Advice, where we give good fintech thoughts, but not good fintech investment advice, that's for damn sure. My name is Alex Johnson. I am joined, as always, by the wise and brilliant Simon Taylor, author of Fintech Brain Food. Simon, how are you, sir?
I'm good. I got my lip balm with me. I am back from the desert. I have been in the Kingdom of Saudi Arabia all week at 24 Fintech. It was fascinating, my friend. You know I love fintech and nerdery and all of the fintech nerds there. But I'm glad to be back. I feel home because I'm actually in my home, but I also feel home to be talking about not fintech investment advice and covering some companies.
Well, I'm glad that this podcast feels like home for you, Simon. That was goal number one when we were starting this little project a while ago now. So I'm glad that is true. As always, for listeners who've heard this particular show before, Simon and I are going to take turns bopping around a few different fintech companies that we think are interesting, and then we will save a little time to manifest some fintech ideas at the end. Simon, would you like to go first, or would you like me to go first?
I'm going to go first because I'm really excited by this one.
That's like your brand, my man. Like I'm grabbing the microphone because I'm so pumped about fintech. Give me your first company.
It really is. And I really hope people don't take it like personally or rude because I'm also British and I hate being rude, but I can't help myself.
As an American, I didn't even notice, Simon, so you're good. Just rock and roll.
Thank you. All right.
Yes.
The first company is called Agree. Imagine if DocuSign and Stripe billing had a baby with some Gen AI sprinkled on top. Mm-hmm. It's like a little bow in the baby's hair. So Agree helps users create, send, and sign digital agreements, but it also bakes invoicing and payments directly into the agreement platform.
Oh.
So users can create, collaborate, and negotiate on an agreement. I've got Ice Ice Baby playing in my head now. Stop, collaborate, and negotiate doesn't quite have the same ring to it, but between multiple parties. So you see a lot of these like negotiation tennis platforms, and you also see people sprinkling Gen AI on there, like the law tech stuff. Mm-hmm. And the AI can help clarify the documents in plain English, help you spot things that you should be worrying about. But then the platform also goes from agreement to signature to invoice to payment to chasing payments and all of that kind of good stuff. And this just struck me as one of those companies where I'm like, why did nobody think of this before? It's like, what? What an interesting business model as well. So they are giving away the agreement software for free versus charging like a DocuSign. But so it's free agreements forever, but they monetize the payments, the invoicing, the billing. So this is like DocuSign at the front, fintech at the back. And so in the process, you can also reconcile your agreements against your billing. So you're not trying to figure out what billing came from what contract, when's that all over. And you get a source of truth for invoices and billing and contracts and all that sort of stuff. So I love this because it combines two mega trends. AI-driven like law tech stuff, and then AI-driven finance workflows, but smushed together. Because they both require a ton of unstructured data and expertise to solve their issues.
Yep.
And I've seen countless companies, I'm sure you have, doing like one of these two things.
Yeah.
But I've never seen that put together before. So interesting. I'm excited by law tech generally as
Yeah.
like the next big regtechy evolution. But Alex, what are your thoughts?
So you probably heard me make sort of an involuntary sound when you were talking. I feel the same way. I mean, it's one of those ones where when you describe it, you're like, why hasn't anyone done that before? And the thing I immediately jumped to was my own personal experience, right? Because I mean, as I think most people in the modern economy do, you do a little consulting or a little work on the sides, right? And so we're all sort of small business owners. And one of the things I guess I hadn't really realized, but is very true, is a lot of the established software, and I can't tell you how many times I've used DocuSign, both as a user for other people's documents that they send me, and then vice versa. I'm well versed in DocuSign, and it works very well for what it does. But it is strange, and it's the best kind of startups are the ones where you don't notice the strangeness because you've gotten used to it, and then someone's like, well, what if we combine these things together? It is very strange how we separate sort of the process of negotiating and signing documents or agreements from the payments or sort of commercial arrangements that come out of those documents. And I guess I had never really realized that we were doing that, but it is strange because, to your point, I find myself, again, as like kind of your classic small business owner side hustle on the side kind of thing, I find myself constantly having to reference back and forth between like this agreement, what terms did we agree to? Okay, now I need to send an invoice. What were the terms for that invoice? Like I find myself doing a lot of manual mapping between those processes. And it occurs to me that the software that's sort of in the market today that handles these different processes, and this is classic, like how you disrupt incumbent markets, it was built to cater to specific teams within large companies, right? So there's a team that's focused on managing legal agreements. There's a team focused on actual like procurement and getting agreements signed and keeping all of that tracked. Then there's a whole other entire group at the company that doesn't really talk to them much at all, that then takes over and does invoicing, payments, billing, all of those sort of financial workflows. But when you condense a company down to a team of one or a small team, it does become a lot more challenging to manage those processes. You're like, why isn't this interconnected? So I think that very simple and obvious, and yet I'm like you, I've never heard anyone doing this. That insight is really powerful. And then to your point about generative AI, I mean, I'm with you in terms of it being a great fit for this kind of stuff because the universe of unstructured data that you're throwing at it is relatively contained, right? So you want its sort of generative ability to understand natural language, to understand unstructured data, but you want to be able to give it sort of parameters in terms of the types of documents and the types of things that it's going to be looking at. So I've always been a big fan of law, regtech, legal agreements as providing the boundaries around which you can then go really deep with that sort of natural language and unstructured data capabilities. So that part of it added on makes sense. And I guess the last thing, just to emphasize a point you already made, is this is definitely a really good example of if you can make money from the financial services parts, you can give away shit that other people aren't willing to give away by themselves, right? And I would imagine there's probably someone at DocuSign who's kind of kicking themselves going, why didn't we see this problem coming? Because it does make a lot of sense to attach these things together. And if that gives you a competitive advantage from a pricing perspective or a bundling perspective, all the better.
Yeah, exactly that. Well, you either die a hero or live long enough to see yourself become an incumbent. And I think
It's our destiny.
Well, I'm already there, my friend. I know I am. But that's why I love doing this show. And that's why I love looking at new companies. And it's kind of my purpose in life is to constantly be barking at that thing coming around the corner because it could be a game changer, and it might not be. But sometimes you see something and you're like, oh, yeah, this makes sense. And I just want to reemphasize a point you made, which is so often tools serve a bit of an org chart, but so often now the freelancer economy, the one-person business is becoming an option, and tools like this will really, really help it get there. I could imagine that every freelancer, one-person band, sort of relatively small business would want something a bit like this. there's the part of my mind going, what if Stripe builds it, which they may do? What if Stripe acquires it, which they may do? Like this, but given how early they are, and given how excited I got when I saw this, if they stay the course, if they can build a company, these are big ifs. They've. This is interesting. This has got a shot.
I totally agree with that. And I think, to the Stripe point, it is really interesting. My brain immediately went to like, why didn't Stripe think of this? Because they are doing billing and they're doing a bunch of stuff in this area. And it's just a classic example of like, once you kind of get locked into design patterns and the way your product works and the constraints you have to live within, you do lose a little bit of this ability to think this way. And so I think it is possible Stripe builds this or acquires them or whatever, but it's a great idea. The company execution stuff, you're always never sure about, but no, I like it a lot. And actually, Simon, I have a company that's in the same general ballpark. Do you mind if I give you my first one?
Please do. Please do.
Okay. Mine is called Revenew, Revenew. Good name. Although likely one that people have tried in slightly other different spellings, if I had to guess, knowing how common names are in fintech. But what this Revenew does is they provide essentially a sort of all-in-one system to help platforms and marketplaces understand and optimize their payments. And so the basic idea here is that if you are a sufficiently scaled up platform or marketplace, you likely are working with one or multiple payment service providers. You are processing a large number of different payments. And it is likely that you don't have a real granular or detailed understanding of the sort of unit economics of all those different payment streams. And so what these guys do is they create essentially a dashboard that helps you pull in all of your existing payment revenue streams from your PSP or from multiple PSPs. They are agnostic at a payment service provider level, and they help you track the metrics that matter. So you can start to drill into the margins and the revenue streams for each individual payment that you're processing in order to understand how the fees you're paying for those payment processing impacts your profitability, how you can adjust your pricing strategy in order to sort of better optimize that profitability. And it actually gives you tools to be able to then optimize those payment processing flows. And so if you want to, say, for example, figure out a slightly different pricing strategy for a segment of customers you have that are not very profitable on a unit economics perspective, they can then give you different tools or different ways to think about optimizing that. So it's kind of a payment processing optimization and profitability platform specifically built for other platforms and marketplaces. And the thing that jumped into my head when I saw it was, again, kind of in this same general realm of what Stripe has been doing with billing and revenue optimization and things like that. This is one of those areas where there is a great deal of need for kind of medium-sized businesses, startups that have reached that sort of initial scale where you do have enough complexity and enough payment volume where it does make sense to have this sort of optimization happening and having someone think about it. But the sophistication necessary to be able to do that is usually lacking inside those companies. Usually you have to have a big team of people who you can throw at this. They'll build their own sort of custom models and ways of pulling apart all this data. This purports to be able to do that in a much more sort of streamlined and automated fashion, which would allow companies at a smaller scale than what you typically see take on this task, be able to start thinking about optimizing their revenue via payments. So what's your immediate reaction to this one?
There's a lack of transparency into unit economics that, frankly, a little bit accidentally might suit the payments companies. And
Yes.
whilst they all have really, well, not all of them, whilst the modern payments companies like an Adyen or a Stripe, Stripe has
Mm-hmm.
Sigma, for instance,
Yep.
have
Yep.
really powerful analytics dashboards. They're just fundamentally not built to be multi PSP.
Right.
And if you want to get better unit economics, if you want better acceptance in more markets, you kind of reach a stage where you need to be multi PSP in order to
Yep.
make that success. Hence, all of the payment automation startups we've seen over the last decade or so.
Mm-hmm.
And so there's an interesting question here of, are you just replacing a really good spreadsheet for a finance ops team? And is there enough value in that to stand on your own 2 feet as a business? I don't know the answer to that. What I do think is possibly more instructive is this constant pattern of unbundling Stripe. This whatever bit of like Stripe's drop down menu of all of their solutions and products are, I can pretty much point at a startup that does it. In fact, I'm trying to now build that slide from my State of Fintech annual report, which is, you remember the old Wells Fargo slide of pointing at like all of the bits Wells Fargo had, and there was some little fintech company doing it. I don't know if I'm sold on the unbundling Stripe thesis for the same reason that a lot of the payment automation startups, kind of reach a certain plateau and then maybe struggle to grow a little bit, which is you're a really great product for a certain size of merchant. But what's your growth upside? You can charge a SaaS fee or a user fee, but like, how do you benefit from your client's growth in a way that a payments business would? In the end, you start to look like a feature of a payments business. So, or you look like a feature of an ERP, or you look like a feature that it's like that's not the natural home. Some things you unbundle and they sort of need a home. And I don't know what the home is for Revenew as well. Is it inside a payments operating system type of play where I can sort of pull in my tokenization provider and these payroll payment automation companies? So it's kind of unclear to me what the third generation of payments will be. And I need to write about this because, if the first generation is your WorldPays, your Chase Payments techs, they're big, they're scalable, they're not going to fall over, they compete
highly
on price.
Compliant. Yeah.
And your second generation is Adyen, Stripe. It's everything you need. It will scale with you, but also it's going to help you on performance and da-da-da-da-da. And the third generation is, Move, Rainforest, these new payments, but with automation providers above them that also help you work with Adyen 2 and tokenization providers and fraud providers. And maybe it's more of a patchwork. I don't know if that is the third generation, but I think Revenew is the kind of thing that needs to exist. I just don't know how big it is. So that was a long way of saying it, but I don't know if that makes sense for you.
No, it makes complete sense. I mean, it's a topic I've been noodling on a lot. I wrote a piece about that in my newsletter a little while back, and the general sort of take I had on it at the time was that I do think, kind of thinking to your point about generations, I do think we are getting to a point where there is a pretty sincere desire on the part of market incumbents that are now used to like digital payments infrastructure to have a more unbundled or more modular stack as it relates to this stuff. And obviously company size matters a lot here, right? Startups don't want unbundled. They don't want modular. They want like one seamless platform that they can work with. And as we were just kind of talking about before, but for larger companies, I do think there is a desire to have more of a modular approach where they can mix and match different components, where they aren't necessarily held hostage to the requirements of or limitations of specific payment platforms that they might have grown up on. And you see this, right, with Stripe recently sort of decoupling its payments from the rest of its software stack via, forward and reverse proxies so that they can work with other PSPs. That, I think, is an acknowledgement that the market, especially larger enterprises, are sort of demanding that Stripe work in that fashion. And I think the thing I would be thinking about if I was trying to unbundle a part of Stripe would be, what is the part of what Stripe does where they're going to be the least motivated from just a business perspective to unbundle what they're doing or to enable full modularity? Like, where's the point where it's like, unless customers absolutely demand at gunpoint that they have this thing, Stripe's going to be like, oh yeah, next quarter, we'll get to that. And they never quite get to it or enable it at quite the right level. And I think Revenew is a pretty good area to look at because the fundamental question we're trying to answer here is, which PSP should you be using in what circumstances and what specific payment methods within that PSP in order to optimize your unit economics? that's just fundamentally competitively not a question that Stripe or Adyen or any of these PSPs is going to be motivated to help you get the best answer to. And so how big can it be? I don't know that I can be huge, although I do have a thesis, Simon, slightly separate from this, that the era of thinking about the viability of companies in terms of how massively big they can get is kind of over. And I see this reflected in like the approaches that VCs are taking and the type of equity they're trying to get early in companies so they can have good exits without it necessarily turning into a decacorn, that kind of thing. So I don't know that it needs to be huge, but I do think if you think about a more modular payments infrastructure as being kind of the future state that a lot of larger companies want, the question is, what points of orchestration within that modular stack are going to be really important and that companies are going to prioritize? And I think tokenization is an area that's going to be really important. And I also think revenue optimization might be. So I think that would be the more kind of bullish case on this as a category. Again, you have to build a good company and sort of succeed on the blocking and tackling stuff as well.
Yeah, and I recall now I actually did have a founder dinner several months ago in London. I run a series of these, and Ben from Revenew came along, and what he said was that's exactly their thesis. It's like every marketplace and platform, this is the one thing they're obsessed with, and it's the perfect wedge to go do everything else. And his thesis was automation and like orchestration is nice, but if you could help me on my pricing, I might give you that later, but like help me with this first. This is where the sharpest pain point is. So who knows? They might have a case, and I yield to his experience because he's been at the coalface a lot closer than I have for a lot longer than I have.
That is true with pretty much every company that you and I talk about. Certainly me. Simon, give me your second company.
Okay, so I was in two minds about which one to cover, but I'm gonna go with my heart, not my head.
Excellent.
Because I found this company fascinating. They're called Barq, Barq. They hit 1 million customers in 21 days, making them the fastest growing neobank or wallet in history outside of China. So they are a digital wallet in the Kingdom of Saudi Arabia. For some context, it took Revolut 12 months to hit 100,000, and I think Cash App hit 10,000. Now, it's apples to oranges because those companies were probably launching smaller on purpose, and there are lots of good reasons for that. But my gut reaction was, so what's the catch? From the country that brought you the line, massive sporting events, and a 10-year late monorail, the temptation is to write this off as like a big government white elephant, but I was so wrong. In the week that founder mode took over the internet, this is founder mode Saudi style. So the CEO, Ahmed, would be a great founder in any geography. I had the luxury of spending an hour with the guy. He's a beast, but a gentleman. And I mean both of those in the best possible way. At 27, he built the largest syndicated lending desk in the country. He left and became the CEO of, after working in several roles in several different banks, and became the CEO of STC Pay and grew that to 10 million users. And he's taken a lot of the team that drove STC Pay with him. And of course, now he has relationships with the regulators. And he said to me, Simon, you have to understand the competition in this market is absolutely terrible. The banks, it's not like a Chase or a Wells where they have an app and they sort of gradually get there and catch up. And there's no Cash App and competitive market dynamic. There's just a real gap. But also on the other side, you've got government mandated eKYC, but most big banks never use it. Their tech doesn't work, so they might send you a one-time PIN and it won't go through. And they're just cloud native, and they're built by a CEO who gets UX design and growth hacks. And then the last point is there is a giant expat population in the kingdom that's in need of solutions. So 27% of the population of the Kingdom of Saudi Arabia is an expat, and most of those are making remittances back home, and the big banks just don't help them. And of course, in the kingdom, there are the Revoluts of the world just don't have market presence. Remitly's not very big. The external ones aren't there, so there's a gap in the market for the homegrown one. And then they have all of these interesting growth hacks. Like, one of the things they'll do is, instead of signing up to the wallet being the thing, they've turned it into a game. And if you want to play this game a little bit more, then you got to invite some friends, because gaming is absolutely massive in a country where it's often too hot to go outside. And so they have a whole gaming culture. And so I found this so fascinating, because this is a fintech wallet, but very unique. And the founder was very clear with me. He sees their goal as to become the Revolut for the region. So they want to have 50, 60 million customers. And whilst their home market has 40 million people in it, they see not just the Middle East region, but North Africa as well, into Europe and elsewhere, being an area that not a lot of people play, but they are massive and growing markets. And there aren't a lot of growth markets. LATAM happened, APAC happened. There's still room to run in both of them, but this could be the next thing. So what are your thoughts?
Well, I mean, mentioning LATAM, it feels Nubank-y in a lot of ways. And just when you're describing kind of the dynamics, I mean, one of the things I find really interesting about some of these sort of emerging or sort of consolidated markets where there are these incumbents is there is this weird dynamic of the options in market are not very good, right? Like it's really kind of antiquated on a lot of levels. And we know what works, right? Like we know what a modern banking experience looks like that all consumers, regardless of geography, would prefer to have. And everyone has smartphones, and so like we know what that design pattern looks like. The question is, do the dynamics in the market allow you to bring that design pattern to market and to succeed? And in the US, it's hard because we have such a fractured banking landscape. There's so many competitors. And to your point, the larger banks at least have the resources to catch up and stay relatively close to smaller ones. The reason I thought of Nubank in Brazil is, in a lot of ways, it reminds me of that, where it's like the dynamic here is a very small number of large incumbents that have zero interest or incentive to innovate at all. But what they understand is it's going to be really, really difficult for some company to come in, because we also kind of have a stranglehold on the regulatory side. And so we can sort of discourage or kill any new incumbents that want to come in and compete with us at scale by just sort of leaning on the regulators and leaning on the sort of public policy apparatus to just not really allow this to happen. And you see that in certain markets, right? Like I would pick on Canada as an example of one where something like this should work. There should be a sort of miniature version of Nubank in Canada, but there's not, because the big banks have a pretty cozy relationship with regulators and they're able to kind of lean on fintech in a way that's not very helpful. But it goes back to your point about the founder. If you have experience navigating that side of things, and the regulators and the people on that side of things, and you can kind of artfully navigate around some of those challenges, if you can just get the product into market, the adoption can explode, because there's no inherent like loyalty to any of the incumbents. People are just waiting for a thing they don't even know that they want, and as soon as it appears, they flock to it. And it sounds like what you're describing is very much that thing where, I mean, it's nice that they have the virality and some of the kind of gaming and other mechanisms built in. That'll help as they try to scale. But it sounds like this initial growth has just been like, oh my God, this is a breath of fresh air compared to the alternatives in the market.
There is the small fact that one of their board members is very senior at Aramco, the country's biggest employer, which is
That's
probably
big.
Helpful.
But, you gotta game some of those things to start, right?
But yeah, exactly. That's not wrong. It's just smart distribution. And
it absolutely is.
Good founder has smart distribution and can get things done in market. And the last thing to bear in mind about the local market is SAMA, the central bank, is actually ultra kind of tight when it comes to the way they think about risk.
Yeah.
So, and the banks in market have a non-performing loan ratio of about 0.7%, and they get worried if it gets close to 1%. Like new banks up at 7, like, yeah, we got this.
Totally.
So you have to be so good on the regulatory side in order to succeed. And you've got to do so in a market where there isn't a lot of cloud infrastructure in the first place. So, I think the way this sort of plays out is a little bit like the way Uber ended up acquiring Careem, which is like a local market player, but Careem still lives as a brand in market. I suspect, they could go that way because the local knowledge you need to succeed in this market is going to be really, really crucial. But, I've met a lot of great founders, and Ahmed is right up there with them. So I wish them well. I hope we hear a lot more about this in the future.
I hope so too. Maybe this will be the podcast people first hear about them, and then later on they'll wonder, like, why wasn't I hearing so much about them? So I love that you went with your heart on that one, Simon. I get a lot of questions about what you should look for when choosing a fintech partner bank. And at the top of that list are security, compliance, and operational resilience. As you know, I'm a huge advocate of building and scaling products responsibly. Nothing grinds my gears more than when companies move fast and break things. With Newline by Fifth Third, you don't have to sacrifice anything. You get the innovation of a modern developer platform with the stability and compliance competency of a leading bank. With an API-first platform, Newline enables enterprises to launch and scale payment, card, and deposit products directly through Fifth Third Bank. No annoying or expensive middleware layers to go through, just a secure and direct relationship with Fifth Third Bank. Find out more about Newline by visiting newline53.com. I am going to go with my heart on my last selection as well. My heart is slightly in mourning on this one, but I wanted to talk it out with you, Simon, because there's a fintech company that I know you know.
We can cuddle. We can get a heart. What do you need?
Simon is a very sweet, tall British man, so that's why I have you on the podcast, Simon, for emotional support. You know Tally.
I do.
And you know that Tally went out of business, which I'm sad about. And the reason I wanted to talk about Tally with you is because I think you and I both liked what they were doing. And as a reminder for the audience, if you weren't familiar with Tally, they essentially helped people pay down their credit card debt. That was the goal. And they would provide both kind of an app that would help you understand your credit card debt. And obviously with credit cards, there's a whole science to the order and way in which you pay them down in order to sort of meet your financial goal in terms of getting out his debt as quickly as possible, or optimizing to other factors like, I still want to maintain X amount of money for this other thing, or I want to maintain some credit limit with this one card. So there's a whole bunch of different constraints. And within that constraint, you want to sort of optimize a strategy for getting out of credit card debt or reducing credit card debt. They provided that engine that did that. They also then would provide, in some cases, refinance loans to help you consolidate down and pay off your credit card debt, right? So cool product, addressing a huge need, because obviously credit card debt is a massive problem in the US and elsewhere. Particularly in the US, I think we've now surged past where we were pre-pandemic. Credit card debt is really like all-time high. And so it definitely is a needed solution. I had not realized that kind of right towards the end, before they went out of business, they had pivoted to more of a B2B model. So rather than going B2C and working directly with consumers, they had also, I think, started to try to pivot into providing the infrastructure or white labeling their service or their engine so that other providers could take advantage of that. And I guess the question I have for you, Simon, is, was that pivot from B2C to B2B too late? I mean, we see that a lot, right? We see it a lot in consumer fintech. Consumer fintech sucks in a lot of ways, right? Like, it's not fun. You have to go do hand-to-hand combat every day to acquire users who are bombarded with lots of other providers that want to work with them. So is it was a little late getting out of B2C and getting into B2B? Or is there something more fundamental, and this would depress me, but I think we need to talk it out, about sort of the lack of interest from both providers in the market and from users on a large scale for a product like this? Like, do people just not want this? As much as we look at it and go, this is a solution that makes sense for a problem, does it not have that sort of traction with users at a scale that we might think it otherwise would?
I'm going to sort of put my finger in the middle of all of those points and say the issue is distribution, right? Like, how do you get this in the hands of customers and get their debt consolidated with debt consolidation people? And going direct to consumer, it's a little bit like selling mental health support, right? You have to know you have an issue to go buy that product in the first place, and
which some people certainly do. There is a market for that, but it's probably not
for it.
As big. Maybe like if you think about the universe of people who have credit card debt versus the percentage that are actively seeking out a solution to escape that problem, it's much smaller than the total universe.
But where I think we're starting to go in the wallet wars is perhaps more interesting. So Apple is trying to differentiate with a lot of things that historically we would have called personal finance management. And I don't think they've really stuck the landing on it. But I do think inevitably it's sort of becoming a default feature that you have to be able to help people at least have visibility of where they are, and if you have that, maybe you could help them out. So that's one sort of train of thought. What happens if there is 4 or 5 wallets and they end up competing on features like who has the best sort of loyalty setup, who has the best identity setup, who's going to get you the most conversion at checkout, etc., etc. There'll be 4 or 5 wallets, of which Pays will probably be in the conversation, Apple will be in the conversation, Stripe Link, maybe Fastlane, who knows if that ever becomes a thing. But so do the wallets get there? The other side is, what is the business model and the incentive for everybody involved? So I was speaking to a similar company in the UK called Incredible. And, it's a beautiful website. They've got a community of people and they help their friends identify problem debt and deal with it. But it feels to me like this is a NerdWallet Credit Karma type of play. Like, actually, those are businesses that lead with education but sell refinancing. Like, and they've built a marketplace. So you can do that. Like, it is an effective way, but there's still like a new distribution gap. And nobody's put those two together. Nobody's taken the Tally-like hand-holding of user experience and put it on a Credit Karma NerdWallet marketplace on the back end, like a Bankrate. Take Bankrate plus Tally and actually what you've got and stick that in a wallet like Apple Pay, and perhaps you've got something. But with all these things, you've got to get the incentive mechanism right. If I was in product in a wallet, and if you're listening and you are, I would really try hard to go get that, because I think there's a lot of revenue sitting on the table from the sort of 6-figure angster consumer that is frustrated by credit debt, that is living month to month because they're servicing lots of different debts. And people always go, oh, how can you be making so much money and so poor with money? It's because you got shit to do, man. By the way, the nursery fee just went up and the roof just broke and the that. That's the angster. So help them with this. And I think that's the thing I would implore anybody in product to think about.
Yeah, I think that's totally fair. I think that's right. The thing that I also wonder about with some of this stuff is, it's like we're trying to attack the problem of revolving debt is really bad, right? I mean, fundamentally, like that's what we're talking about, is like revolving debt is pretty much the worst kind of debt you can carry. There's lots of other types of debt that have value and sort of virtue to you as a consumer. Revolving debt is just horrible. I mean, not that you occasionally don't need to do it, and there's a nice sort of mechanism built in for cash flow management into cards, but long-term revolving of debt month over month just kills you, right? And so I think that is still the core problem, at least in American finance and likely in other countries as well. But to your point, I'm trying to think of the right way to say this, you sort of have to give consumers the right door to escape from that problem with, right? And like one door, which I think we've tried with Tally and we've tried with kind of PFM and stuff, is like, hey, if you're anxious about this, if you're scared about this, if this is like really unfun, come do this unfun work of getting out of this problem, and we'll help you and we'll hold your hand to do that. And
come face the scary demon by looking at it
right,
directly in the eyes with its angry claws.
Right. And like that like people are really good at problem avoidance, right? Like I don't want to do that. I don't think lots of people don't want to do that, right? Like looking a problem directly in the eye is really hard. Whereas I guess I would contrast it with probably the most successful like product construct that is helping people, I think, maybe navigate around this problem a bit more is paying for BNPL, right? And like, especially when it's attached to, like I'm thinking about Affirm in this context, right? Where Affirm's like North Star is, I think, we sort of want to destroy revolving credit card debt. Like that's the market we want to just
but they also have destroy. A credit card.
Yeah, well, I mean, and the thing that's interesting about that is I think they're trying to get at it from the perspective of, we're not trying to get you to look the problem directly in the eye. We're not trying to say, you have this massive problem over here that you need to address and deconstruct and take apart and get out of. That's right for some people, but for the most people, it's more like, hey, instead of continuing to use that credit card, which isn't really that good for you, why don't you use this debit card that has pay later functionality built into it, and it's not really designed to allow for revolving debt. It's designed to allow you to continue to do the things you want. You can shop, you can have fun, you can get rewards. Like there's all these things that make it just like a nice product to use, but over time it will reduce this problem that you also don't like. And so it's a different door to get away from the problem. And I wonder if part of the issue when we look at things like, oh my God, people have so much credit card debt, is we don't think about, almost from like a user psychology perspective, the best way to help people face and get away from that problem.
And I think what happens when there's a roof leak and there's a baby crying, you reach for the credit card to try and deal with the issue and get it fixed urgently. And being the alternative to that, BNPL has a right to win. But also, it's worth mentioning, Affirm is available inside of Apple Pay. Like these things will inevitably become the case, but it's sort of, it's just showing up at that point of need and being the least friction option available, and the cash flow sort of takes care of itself. It serves the same function. I don't have to find all of that cash right now because it's not sitting in my bank account. So I can deal with the problem and kind of not have to worry about it anymore. Oh, thank goodness. But the revolving debt is, next time a problem comes up, now I've got two problems of like, I'm not quite out of my revolving debt, and also, I've got this problem to deal with. So
that's a great way of putting it, right? Like, no. I mean, it's an exactly right way to put it, which is revolving debt solves a problem for you now and creates a problem for you later, right? to do a little copywriting for BNPL companies.
It literally compounds your finance issues. It literally compounds it. Like
it does. It literally does, exactly. Whereas I think, BNPL, like the thing I like about it is, it still is, debt, obviously. And I think there are certain orientations around BNPL that are very shopping oriented, that are maybe not financially healthy. But as a product construct, it doesn't create that compounding problem for you later, right? It's not debt now, more debt later. It's debt now, and that's it. And so I do think there is a counter positioning in this space that we need to think more about, because the model of face your debt head on, there are smaller markets for it. I mean, obviously there's lots of PFM tools. There's sort of different budgeting schools like Dave Ramsey and stuff. Like there are things that exist to solve this for people who want to look the problem in the face. But for the much larger market, it seems like we need to attack this in a different way. So I think that's
point
I'll
leave you with on this thing is I think Moneyline in their latest results talked about their marketplace being one of their biggest drivers of growth. And that's interesting. That's really interesting. Like there aren't a lot of non-banky neobanks with a marketplace. And I don't think many that have tried it have really stuck the landing on it. So what does what does that look like to have a marketplace of where you offer some products and you want your users to use those products, but there are some that you can't offer for regulatory reasons or you just haven't built yet. And so here's a marketplace and you monetize that with the right user experience on the top. That could be something. But now, like, what would the marketplace inside of Apple Pay look like? That's and what does that experience look like? What does that look like inside of Pays, for goodness sake?
What it looks like inside of Pays is a question that I'm probably going to spend some time thinking about as I fall asleep tonight, because I'm deeply interested in that. But we'll leave that for the moment, Mr. Taylor. Before I let you go, can we manifest a couple ideas?
Yeah, I feel like we just spent a little bit of time manifesting.
We did
to some extent, but go ahead, be my guest.
All right. Well, I have one for you, which is real quick a question. Why is it that I cannot permission my data in a multiplayer fashion? So the thing I'm noodling on is, and I'll give you a specific example. My in-laws are getting older, and in that context, I think a lot about, okay, so what do we do to protect them from falling victim to scams, which tend to target older Americans, particularly older Americans with assets to lose? Why is it that my in-laws can't permission a limited form of data sharing for their accounts to an application or a system that I use that would allow me to have some limited read and maybe write or at least like notification access in order to help monitor their accounts for fraud? Now, I get that there are specific applications or tools that I could get them to sign up for and that I could sign up for that would do that. But on more of an infrastructure level, if I'm talking about like Plaid or MX or any of the sort of companies that help with consumer permission data sharing, why is it single player by default? Why can't I have multiplayer data sharing?
Great question.
So that would be my manifesting.
Yeah. Well, product teams at every one of the aggregators, get on with it. Go build it, go package it, go sell it. Like these are inherently buildable things for the right problem solver. The thing I was thinking about that I want to manifest is payments that work inside of chat. WhatsApp payments are huge, and pay links inside of India and Brazil and the Pix integration, and it just kind of works. And I'm here sitting in the UK, and like I'm trying to figure out which way to pay somebody internationally, and it's like, why is this so hard? Like, why isn't chat the default? Chat should be the default mechanism, because if I know you well enough, I've got you on one of the chat applications somewhere.
Yes,
that WhatsApp is a direct line to my brain. I'm international. I don't use iMessage. Sorry, the rest of the world operates differently to the United States.
That's fair.
But even then, like RCS integration for some sort of payment link standardy thing would be really, really cool. Figure that out. Like it just, could you imagine the user experience where Jack Dorsey was originally going with cash tags was really smart, but they didn't make it open loop.
Yeah.
The idea of a cash tag instead of a hashtag, but integrate it with Twitter, bind it tightly, and then make that available to everybody else. But you didn't, and it was a decade ago, and now I'm sad.
No, it's very true. And I mean, the point you just made at the end is probably the critical point. Make it open loop. Like I understand the temptation to make it closed loop. Believe me, I do. But like, it will be such a bigger benefit to the ecosystem and to you if you make it open loop. Just like trust us on this. Make it open loop. I could wish that into existence, man. I'll tell you.
Payments in 2024 desperately needs a DHawk.
Yes.
We need a Fresno drop. We need a DHawk, and we need just like a really polite, kind of quiet Mormon from is it Eden in Utah to just come along and quietly convince everybody that this is in fact the best way to do things, and then maybe it's a win-win-win for everybody. How about that? Maybe we don't have to just like lobby to win in a zero-sum game. Maybe we could be positive sum. I know, crazy idea. crazy.
It is crazy. That is some really good manifesting, though. Us trying to manifest DHawk to return is a great place to leave it.
It's more like summoning at this point, isn't it? It's like it's
reanimating almost. No, I think that is an awesome place to leave it. This was super fun, and let's do it again.
You're a hero, so yeah, I'll be back. You can't get rid of me now.
All right, you're a good man. I appreciate it. Thank you for listening to this episode of FinTech Takes. Stay up to date with emerging companies and the latest FinTech trends by subscribing wherever you get your podcasts. And if you love FinTech Takes, please tell a friend.